All about the FOMC, obviously, today. A well anticipated event. Actually, is a spotlight of the month, especially after we have seen uh, the inflation and the surprise in the NFP as well. So let me check that everything is live. Hello, everyone. Welcome. Live session, a well anticipated live session. Basically, I decided to put it in the mid of the day just to have a bit of a briefing regarding the overall the so far basically performance market performance the whole month, but also a bit of a preparation ahead of the big event today, which is obviously the FOMC. Sorry for that. So yeah, that's why we decided to be a bit before the US Open. So just to be a bit of a preparation ahead of the Open. Yeah, so I noticed a very funny phrase today, or at least it sounded a bit funny to me regarding the FOMC today and Mr. Powell and his press conference. It was something. It's a phrase. Um, Basically, it was that heavy is the head that wears the crown. So basically, regarding the Fed chairman, Mr. Powell, today, the big question today is not whether they're gonna cut or not, as you might already know, but the key, the crucial thing today, the key question today is how much they're gonna cut. So that's a $1 million question. Let's say it's a major question because after the inflation and the NFP, there was a lot of debate whether they're gonna be 50 points or 25 points. So welcome everyone. I can see more and more people joining. So I don't know whether you okay, you cannot see my screen yet. Give me a moment, okay? Actually, I'm gonna share also the economic calendar as well, just to be in line with what is expected. A quick briefing. Here we are. Check. Yes, you can see both ones. So this is the economic calendar before the big decision today. So as you can see, we have plenty of time. The reason for this live is to get well prepared ahead of the US Open. So before that, we have the building permits along with the housing stats. As you already, some of you might know, the main scenario is for a 25 points rate cut. However, guys, as I mentioned, after especially the inflation, there is a lot of debate. So a lot of weight has been added to the Fed, and most precisely Mr. Powell. So it's this is the key. There is a lot of debate. I can see that the Fed Fund futures, they are like 65-30 currently. So 65% actually suggest a 50 points rate cut today, while there is a 35% supporting a 25 points rate cut. If you check the Fed Watch, you're gonna see it as well. That was not the case last week. Okay, last week it was the odds were for a 25 points rate cut. That turned upside down after the inflation, as you might already know, because we have had a live session as well during the inflation release. So that turned upside down. That day, if I remember properly, we were 50-50, and now the odds suggest a 50 points rate cut, or at least the Fed Watch, the market, the analysts, the economists all over the world. It seems that they are they believe that today we're gonna see a more aggressive stance from the Fed. So, guys, that's is what is all about today. Is how much. Obviously, the press conference, as usual, it's crucial because it's gonna give us hints regarding whether they will continue an aggressive uh, stance or not, or whether we're gonna see once off rate cut and then a bit of a pause and going along with the data dependent and etc. So press conference for sure will be a very volatile one, but this time the rate cut will be a volatile moment as well. This is a well anticipated rate cut, but it's unclear regarding the size of it. That's why I'm gonna share right now my chart as well. I don't want to keep you waiting. I have the euro dollar, obviously the most widely known and most tradable asset globally. Here we are, perfect euro dollar. Just okay, sharing as well. Perfect. Just allow me. So, as I was saying, here is euro dollar, but we have seen, okay, this is the weekly chart, okay? This is the weekly chart, so bear with me, stay with me for a bit. I want to explain a bit why I'm presenting the weekly chart. Firstly, I wanted you to check the overall picture. We had seen a rally of euro dollar, so basically strong dollar against the euro from June. Sorry, weak dollar against euro since June, end of June, up to the end of August. This is why is that? Basically, as you already know, the market is always ahead of themselves. I keep saying that again and again. So we have seen a discounting, the market's discounting potential rate cuts way for many months now. Okay, so we had a swing lower in September because of the mixed data. However, if I zoom in, you're gonna see that there is a general support of the asset above the 111 territory. Let me put a bit of a line over here just to show you that it has been well supported because the market is still it actually supports that we're gonna have consecutive rate cuts. So the market, it discounts basically the risk of having firstly 50 points rate cut today, but also in general a more aggressive approach until the year end. So the markets have already priced in some of these rate cuts since June. Okay, since June. This is why I will get back to the weekly chart. I want to show you that this looks like a flag. The pole of the flag, right? And the actual flag. I cannot draw it perfectly, but you can see, I believe you can see that. So down, the pole of the flag. So we had basically, let me put the daily chart so you can see it even better. We had the breakout or the retest, let's say, of the top of this flag. So this flag is a bullish pattern. So you understand that a confirmed shift higher, a confirmed move northwards will actually open the doors to 111, 111, oh, sorry, 112, 112.50, or even 130. Everything depends on what we're gonna see today. And I'm not referring only to the cut that we are expecting, but also the tone of the press conference, whether it will be a more cautious one, whether it's going to be an aggressive, hawkish one. A hawkish one could push further the euro dollar higher. Basically, we're going to see the dollar weakening on the prospect of several rate cuts until the end of the year. Okay, so have this in mind. We have a bullish pennant in euro dollar. So the key resistance area basically has already the immediate one, which is this what I've used over here basically, guys, is Fibonacci level, but a diagonal one, which is brilliant because if it helped a lot on spotting the breakdown over here and basically waiting for confirmation for this next immediate sub resistance level by connecting my fractals and my latest levels before an attempt to the 111.70 territory and potentially 112 and so on and so forth. So this resistance has already broken, indicating that we're gonna see further rise for euro dollar. So before I start analyzing other crosses and etc., I would like to stay a bit on the fundamentals because I want you to be fully ready for what's coming today. I want you to fully understand what's the what might happen, let's say, at least to comprehend the fundamentals. Hello, everyone. Hello, Alan, Prince, Patel, Assad. Welcome, everyone. Hi. Hi. Hello, good afternoon. Yeah, it is very dangerous, Hitesh. You're absolutely right. Basically, I saw a very funny picture. I don't know whether I can share it with you today. Basically, let me check whether it was really funny. It was he was wearing a crown. Um, so he will be a king today. Let me see whether I can I share it somehow. Um, that was really really funny. Sorry for that, but it was really funny. So Mr. Powell will be on stage today. So basically, we're gonna wait and see how he's. What matters, guys, is the very first 15 minutes of his statements. This is what this is the moment, that summary that he's doing at the very beginning. It includes every single detail that we need in order to understand what's coming. That's why the very first 15 minutes are the most important in a monetary policy statement. Afterwards, the next thing that you need to have in mind is the very first few questions from reporters. This is where we are getting the volatility. These two sessions, the first 15 minutes of the speech and the very first few, actually the very first 15 and or up to 30 minutes of the reporters' questions are key. Is where we have the volatility is really high. So yeah, I'm gonna shut it down now. But I found it a bit funny, to be honest. Indeed, the speech is very dangerous. Not dangerous for for us, for the market. But as I explained in a video that we posted on Monday, was it on YouTube? This is when you will see a major, oh, sorry, I shouldn't be here. Major volatility. And since you mentioned it, Hitesh, I would like to actually to spend 5 minutes of your time. Actually, I will write it down. What's the direction for FOMC news? We're gonna see that as well. Gold, yes, I'm gonna go through gold, oil, the very first assets that I'm gonna do today. As usual, stocks, euro, dollar, of course. So don't worry about it. The very first charts that I'm gonna I'm gonna I'm gonna share with you today. I'm gonna analyze with you today is gold and oil. Before we start, I know that you might you want to go straight into the chart and see together some support and resistance levels, but because this is a session as a preparation, let's say, for the FOMC later on, I would like you guys, and I will try to stick it on our as a comment. We'll try to put it as a comment right now, if I can, basically. Let me see whether I can do that. Can I? It's a big text. Sorry for that. These are three phases that you should be. Can I share it? It looks massive. Okay. I have shared with you in Facebook and YouTube three phases of the FOMC that you need to have in mind today. Basically, 2 o'clock is when the announcement is coming. Okay, it's an announcement. So you need to be careful, because right after the announcement you can expect a really sharp market move, especially if we have that 50 points, which is an important and significant major change in the interest rates. So there will be an immediate reaction from the markets. So put some be careful if you are someone that is trading the news. Okay, if you're gonna for those that are trading the news, there is the so-called proactive trading. Basically, is to enter a trade before the rate decision and exit afterwards. But it needs a very careful planning for this approach. It needs a strong conviction, as I explained in my video, because it's the most volatile moment. So you are the market could easily kick your stop loss. So you need to consider having small positions to manage your risk. In this case, if you are using a proactive trading, basically enter a trade before the news and exit a trade after the news. Now, if you're someone that another approach, let's say, it's the so-called reactive trading, waiting for the announcement to see to basically observe the very first immediate reaction from the market and trade based on that initial movement. But what it's our favorite strategy, and I believe the majority of the market participants, is to wait a bit for the market noise to settle down, wait for that initial volatility to subside in order to see the true direction of the market. Okay, that's a very different strategy. So yeah, I don't know what kind of traders you are, but I had to say that. But what I sent in the chart It's the three phases, the three time periods that you need to be careful. The initial spike at 2 o'clock, okay, Eastern time. So server time, it will be basically 2 o'clock is the Eastern time, okay? What I said is the Eastern time. If we are referring to the universal time, it will be 6 o'clock, okay? 6 o'clock. So 6 o'clock. Then the very next important phase is the 15 minutes, basically the very first 15 minutes before before the press conference. So on the anticipation of the press conference, or during the very first 15 minutes of the press conference, we are seeing a lot of we might see consolidation, but we might also see profit taking, okay, as they wait for the press conference, as the market is waiting for the market conference. And the very next important phase that you need to be aware is when the Fed chair starts speaking. The volatility, that moment, it will increase significant. So because is when we're gonna have clues for the future interest rates, concerns about growth, concerns about inflation. Is the very first 15 minutes. I have put everything on the chat. So I want to go straight back to the euro dollar. This is the daily chart, guys. Remember the flag, sorry. We are at a very key resistance territory right now, and I'm referring to this zone over here. Okay, this zone over here. This on Monday it broken it and it stay above it. So that is a bullish sign. So a confirmed breakout of this trend line that I have put by connecting the latest highs will be the trigger point for a potential move to the upside to 111.70, 112, and so on and so forth. So I'm gonna zoom into the daily, to the 1 hour chart, so you can see that the asset is consolidating since yesterday, okay? Consolidating since yesterday with immediate support level at 111.10 and immediate resistance level at 111.40. So until the US Open and possibly until the FOMC today, basically until the rate decision, we might see this consolidation to continue. So keep an eye on. Actually, I'm gonna put a zone, okay? 140 to 145 level, 140 to 145, and possibly we're gonna see some heightened pending orders over here. So, yeah, as I said, a break above it, it could attract more buyers and move up to 1175, 1112, sorry, 112, and so on and so forth. In the meantime, a lot of consolidation is seen, and this is expected to remain the case until the FOMC release. Let me check also momentum indicator. I'm gonna put my MACD on, and stochastics as well. Okay, stochastics pretty much is ups and down, ups and down, ups and down. I'm gonna RSI and my MACD. Okay, MACD is literally flat. Is all this consolidation basically? They are in line. Both RSI and MACD, they are in line with this consolidation. So this is expected to continue until the rate decision. So immediate resistance at 111.40, 111.45. Immediate support at 111.10, guys. keep that in mind. Let's move on. I didn't get that, Dominic. Can you explain on present increase on chat training on the present sharp shooters? Sorry, I didn't. Sorry, I didn't get any of that. Okay, okay, my dear friend, dear Nagafero, I cannot tell you what to do. I don't know your risk tolerance. I don't know what type of trader you are. Are you a scalper? Are you a day trader? Are you a swing trader? Are you what kind of person you are? I cannot advise what you do. Anyway, I'm not allowed to, okay? But how we can help you as analysts, the whole analyst team all over the world is here to try to help you understand the fundamentals, help you to understand technical analysis, how to use it, how to create your own strategy, your own trading plan, to give you all the learning tools, let's say, to find out what kind of trader you are and your own, to find out your own strategy. I cannot tell you what to do. But all the things that I mentioned, whether I said that we have a lot of consolidation, so keep an eye on this resistance and that support level. Everything that I say is what I see in the charts, what the chart is telling me. So this, I believe that this should help you to, if you see a significant breakout, either of a resistance or a support level, two will help you to take your own decision. But I cannot, I'm really sorry, we don't provide trading signals. We are not allowed to. Uh, so, yeah, this is the only way that I can help is by analyzing what I can see. So, Hitesh, if they cut by 25 rate cut, then sharp up or down. Okay. Considering that right now the odds are for a 50 rate cut, okay, a 25 points rate cut shouldn't impact the 25 points shouldn't impact the significant the market, my dear Hitesh, because there will be the press conference that will make everything clearer. So 25 is something that it was anyway well anticipated for months now, already priced in. So it should, okay, it might had a significant like quick reaction, but it shouldn't um it shouldn't uh, it should it should keep the dollar a bit unchanged, a bit steady ahead of the press conference. This is what how I see things, because the 25 is something that was already priced in for months now, weeks now. So it shouldn't be a surprise. This is what I'm trying to say. But 50 is something that theoretically at least, okay, should add pressure in the dollar, okay? So we might see a swing higher in this case for euro dollar. But I'm saying again, guys, there would be usually we have a spike, an immediate spike, that very moment of the rate announcement. But what matters, where we're gonna see the most volatility and where we're gonna see a clearer direction, is when Mr. Powell starts speaking. Okay, so that's why now, regardless of what will happen, you need to do your homework. You need to find your support resistance levels right now. use some alerts, use some pending orders with trailing stop losses as well. Why not? In order to jump in the market without any delay and with a proper risk management as usual. So the markets are expected to be glean from the size of the cat and the tone of the statement. Um, we're gonna have the SEP as well this month, so that might give some a bit of a light, but yeah, if we have a 25 points, that could keep the markets a bit unchanged until the press conference. But if we see 50 points, that would be crucial. And we might see a really high volatility in this case, and potentially some further support for the dollar. Cautious one, limited one, because what matters is Mr. Powell's speech. Once again, I repeat again and again, keep an eye on the press conference. Set some pending orders, find your trigger points, find your support levels. Do your homework. Yeah, so well, I think I'm gonna keep it there regarding the fundamentals, as unless you want me to analyze something. Oh, okay. Don't worry, Hitesh. Don't worry. In this case, I'll go to the dollar yen. If this is the case for everyone over here, guys, I would like then, since Hitesh over here is saying that we don't know history, ma'am, no experience Fed rate cut. Okay, no worries, no worries. Do you, how experienced you are as a trader, Hitesh? Um, I'm happy to have you all here as well. By the way, guys, the feedback is more than appreciated. Let me know if you want me to change something. If this does not help you, let me know. Write down what you want what you want from me. So, okay, one by one, I have many questions. So, okay, regarding history, that's a very good question. Why? Because I would like very quickly to remind you what happened on July. Do you remember what happened on July? Any of you? Okay, so I'm gonna remind you what happened in July. Let me find. This is this is the one. This is dollar yen. So in July, guys, when we had the federal the FOMC meeting once again, the dollar yen. Let me try and remember. I don't remember the date. Let me just check it. Fed meeting in July was, I don't remember when it was. It was 30th. Yeah, 30th. Let me give you an example over here. 30th of July. 1 hour chart. Let me go back and find the 30th of July. Just to help you comprehend. Okay, here we are. Here we are. Was it the 30th? Wasn't it? Was 30th, 31st? Yeah, 31st was the release, if I'm not mistaken. Yes. So. It wasn't. Have my doubts now. Sorry for that. July. Let me be precise. FOMC. Yeah, okay. It was on the 31st. On the 31st, here we are. Was this rally? Okay. So on the on the July meeting, okay, we had this, what you see over here, this rise over here. Okay. So basically, the dollar yen, as you can see over here, rallied when the Fed decided to leave interest rates unchanged. Okay, so that was it was 31st. So let me be precise with the time. So before we so 31st. Okay, this is the Asia Open. No, Asia session. So in Asia session, it was consolidating. And into the Europe session and into the US session, it was rising and rising and rising and rising until it breached the, oops, oh my God. Sorry. Where's my dollar yen? Why change? I was here. Again? Sorry, my bad. I didn't notice that it changed. 6 o'clock. 31st. 4 o'clock. Yeah, here we are. Okay. Zoom in a bit. So this is where we are. Okay, perfect. Okay, so that was the initial reaction when the market saw that. Sorry for that. It's not helpful at all. It takes me back to the current one instead of keeping me to the asset that I want. Sorry, I'm wasting your time, but it's very important to give this example. Back in July. Okay. Hopefully it won't change again. If it change again, I'm gonna say it verbally, okay? I'm gonna share it verbally. So as I was saying, initially the dollar yen found some support on the, and actually it kept moving higher, and as soon as we had the release, which was unchanged, they kept the rate unchanged in July at 5.5%. So we have seen this support, this rally, temporary rally of the dollar yen in the rate decision. But as soon as Mr. Powell as soon as Mr. Powell starts speaking, the dollar started getting weaker. So that led to a really sharp sell-off, and that continued until the Asia market. So you see, it boosted further. Before the announcement, the dollar yen was higher. Okay, so that's that means the yen got a weaker. But as soon as the rate was out, and especially as we had the confirmation from the Fed chair, from the Fed Powell, that in the near future we're gonna see a more aggressive approach, and they will cut range, and that was the last time that they held range unchanged. We had a quick reversal into the Asia session until the next day, until the next day. We have seen that it reversed all the losses and extended lower to 148. So basically, yen gain gain some losses back, dollar weakened significant, and we had this reversal into the late US session up to the Asia session, because in his comments he stated that the inflation saw some progress, so we're gonna cut rates from now onwards. Basically, that was the key. He pretty much confirmed last time that it was the last time that they were gonna keep rates unchanged, and we're gonna see rate cuts and possibly in September. So literally say that he said that we're gonna see rate cuts. The rate cuts are really possible in September. So you understand that the tone and what he will say is very, very important. Indeed, the first reaction, or the pre FOMC reaction, was to support the dollar. But as soon as the press conference was out and we get the first remarks and we understood what's coming, it pushed the dollar again higher. So that was a clear sell-off for the dollar back then. Okay? Clear? So let's get back to our analysis. Before I go to this question, I had an earlier one. I'm a scalper and day trader. My question for you is, how does a trader identify and find high volatility trading opportunities? Okay, scalper is a different approach. Day trade is a different approach. Now, the very first thing that you need to do, my dear Radebe, and I think you're already doing it, since I understand that you're an experienced trader, right? It's checking the overall momentum and trend, right? So, for example, in the dollar yen, let's keep dollar yen for example, okay? Right now, basically since June, dollar yen has been in a sell-off. Yen is gaining significantly against the dollar. So we had a really sharp sell-off. And overall, we have seen we have seen a negative outlook for dollar yen. We are all in line with that, right? So the very first thing that you need to do is check the overall trend, because trend is our friend. Okay, especially if you are a pro, you have a day, you're saying that you are the day trader as well. So guys, trend is your friend. Try to be to be on the same side as the trend, not against the trend. And if you're considering going against the trend, at least try to have some small positions in order to manage your risk. Okay, if you're gonna go against the trend. So, my dear friend, first of all, the very first thing that each trader should do every morning, check the overall outlook of each asset. So we know the facts. We're in a downtrend for months now. There was a bit of a correction in July, limited one, and we are currently in a new downwards channel, right? Let me fix this a bit. Gonna use, no, that was much better one. Sorry. What am I doing wrong? Yeah, perfect. Okay. Yes, here we are. A nice downwards channel. Currently, if I zoom in or go to the 4-hour chart, we can see that here we are, that our dollar yen is in the middle of the channel. So what that states? That states that is a key retracement level. So we need to keep an eye and see whether at that territory we're gonna see a retracement or whether the momentum is strong enough to break it. Okay, but a move, even if it breaks it, okay, even if it gets back above the midline of this channel, a confirmation that the dollar yen could move up to the top of the channel can only be seen if it breaks the previous swings, the previous high. So the previous high is at 142, 47, 42, maybe precise. The high of the previous swing is at, come on, I think it's 42, 142, 43. So we need to see a break of that level in order to suggest that it will increase, it will move higher and retest the 143 level, or even breach the peak of the peak of the channel. So my dear friend, overall trend, overall momentum, then you go down, see where it exactly is settled, find immediate resistance and support levels, okay? Because by doing that, you're gonna the immediate support levels will be used as trigger points, entry levels, okay? Now, regarding scalping is a different thing, but let's stay on the day trading for now. Okay, so we find the immediate resistance, but look at that. Momentum is neutral. What that means? It means that there is not enough strength to push the dollar yen higher. Okay, so you need to pay a bit attention, because it looks that there is not enough room, there is not enough strength to break the mid of the channel. So you need to be careful and alert for a potential reversal. Okay, I will go down to the 1 hour chart to see what's going on. Same thing. Momentum, it is positive, but it's really close to the zero level, to the neutral zone. Basically, the fast moving average have clashed. They are on top of each other, suggesting that it's consolidating. RSI is at 57, but still flat. So it's consolidating for now, but overall there is not enough to suggest another swing to the upside. So you need to be alert for a potential reversal as well. So immediate flow. Since you are a scalper as well, I'm going to put the 30-minute chart. Since you are a scalper, you need to pay attention to the 141.50 level, 48. I will put it below the fractal, and the 141.15. Basically, a break with 141.48 could retest the next support level at 141.15. And if that breaks as well, then the asset could return back to this zone over here, basically at the 140 area, in which we had a nice block over here back then. Okay, clear? There are a lot of ways to identify a potential trading, etc., as long as you be well prepared. Hello, ma'am. Do you think the relative policy divergence between the ECB and the Fed is likely to support the dollar against the euro? That's a very good question. Very good question. Currently, sorry for that. Take a sip. Very good question. So, I'm gonna get back to the euro dollar then. Get back to the daily chart. Let me find also. Okay, I don't have it in front of me right now. So think if today the FOMC cuts by 50 points, that will leave. Let me. Um, Let me find the list with all the. So currently, the euro is, as you know, at 3.65. We've seen it last week. It's at 365. I need to write it down. Never mind. 365% is the interest rate in ECB. Even if the Fed cut rates by 50 points today, bring that will keep the FOMC down to four. Oh, help me over here. I'm stuck. 475. Okay, that will that will means 475, right? Am I correct? Or am I driving insane? Sorry. Yeah, if they cut by 50 points today, that means that will be that they will go down to 5%. So we're gonna see 5% interest rates for the Fed, 365 for the euro. So there is still a big gap between the two, right? So however, uh, the ECB last week delivered the rate cut as a pretty cautious one. So the tone of Ms. Lagarde and what she said, and later on the Fed official, the ECB official, etc., they didn't give the impression that they were going to continue with this aggressive approach. They give the impression that um, uh, in the next meeting, they might keep the rate unchanged. So, having this in mind, considering that for the near future the Fed is expected to continue rates and not hold it, then we might see, my dear Cosmas, the dollar remaining weaker against the euro. Regardless of the change, the gap that we have between the rates differentials, because the ECB was so cautious, was a bit dovish, let's say. They said that the rates are likely to stay on hold in the next meeting. On the flip side, the Fed opened the doors for further rate cuts. So that could keep the dollar under pressure against the euro. But, Cosmas, we are waiting for the press conference today because it might surprise us. I don't know. Maybe Mr. Powell changed his mind and the members, and they said that okay. Uh, uh, in the next meeting, we're gonna stay data dependent, and we still have on the table to keep rates unchanged. I don't know. I mean, we need to wait to see the press conference. But even the press conference, he repeats what he said last time, and he keeps the doors open for further rate cuts. Then this is something that could support the euro dollar, so keep the dollar weaker against the euro, theoretically at least. Okay, hopefully I helped you with your question. So guys, I spent a lot of time explaining some of the some fundamentals. We are already an hour live, so would really like to go through gold. So excuse me, I'm gonna start gold. I'm gonna stay on technical analysis for now. My friend Warren, hopefully you are still here. You mentioned a gold hitting the 2600s today. Might be possible. Momentum is strong. This is a daily chart. Momentum is strong. RSI, sorry, this is stochastic. Let me put my RSI as well. RSI is at 66 and it keeps pointing upwards. So overall, it's it's supported. It's quite supported. I mean, we see a nice, okay, not so sharp support, but it's moving higher. It broke that key zone last week, which was the most important thing, and that opened the doors further to the upside. So yes, momentum, RSI, they support uh, 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 they support in general that the gold until the year end could see further rally. So regarding gold, you need to you need to keep an eye on repeated resistance levels, like what happened last week. We knew that we had this 3 times resistance over here, 3 fractals on this zone over here, 2540, something that we mentioned in the previous lives, that keep an eye, guys, on this resistance, because if it breaks, we're gonna see the dollar, the gold moving higher. And indeed it happened. Okay, so with gold, you need to be fully technical. You need to keep an eye on the next immediate resistance levels, support levels, and so on and so forth. Keep an eye on the momentum. The momentum remains strong. Fundamentals expected to continue supporting the gold. Sorry. So until the year end, the outlook for gold is positive. Positive. So right now, we are seeing that the last 3 days is choppy. There is small moves sideways, stuck. Obviously, because we are anticipated the FOMC. I'm gonna go down to the 1 hour chart. Okay. So we had a bit of a rounding top over here, with a nice repeated support here, 2560. Currently, the asset is moving higher. Let me add my Fibonacci's as well. So where are the asset already recovered more? This is the 1 hour chart, my dear friends, 1 hour chart, okay? So it already retesting the 61.8 and the 65% Fibonacci level on this latest down leg. This is 1 hour chart. So it's already there. Stochastic, as you can see, still pointing higher. MACD is a bit dodgy. Moving averages are pointing higher, so it seems that there is some support. Okay, so if we see a confirmed candle, a candle closing above the 65%, then the next area to be closely monitored, guys, it will be the 2590 level. Immediate one is the 2585, but yeah, the ceiling that we have seen this week, 2590 or even 2600s. Everything suggests that the gold is well supported. It has been to the upside for the whole European session so far. RSI, okay, RSI is at 56, but stochastic is rising. We might see a bit of a consolidation ahead of the FOMC, a bit of a pullback, but overall is well supported. So yeah. Nonetheless, the next key support resistance levels is 2600 and 2630 is the, because this is the 261 Fibonacci extension from this latest swing. So I don't know what to say about gold. I mean, gold is it is what it is, well supported by technicals, by fundamentals. Obviously, all the attention it is on the gold ahead of the FOMC. But considering that we are expecting 50 points rate cut today, and considering that the gold overall is positive, the outlook is positive, we might see in the short term, 30 minutes chart, 1 hour chart, a bit of a profit taking. Okay, a bit of a profit taking. So we might see some profit taking, okay, before the release. But with an appropriate risk management, uh, you can I mean, in the short term, guys, okay, 15, 30 minutes chart, indeed, before the release, we might see some profit taking conditions. But even if we see a pullback because we have profit taking or something before the FOMC, that profit taking will be limited. That pullback will be limited. So we're gonna possibly see a buying the dip conditions. So keep an eye. Any pullback, what I'm trying to say is that any reversal could be seen as a buying the dip situation. Okay. Immediate support is at 25.74. Okay. So yeah, some profit taking before the FOMC. It might be seen, yes, indeed, but the overall outlook suggests that it will continue to the upside with key resistance at, as I said, the 65%, which is already hit it, by the way. Let me check. Yep. It's already retesting it again and again. Um, so yeah, it's well supported by bulls over here. The bulls are in control of the gold. Even if the sellers jump into gold, we're gonna see a limited swing lower. So basically a better support level could be seen with a trend line by connecting the latest hourly swing lows. Okay, perfect. Now let's move on to the before I finish with gold, for the 4 hour. Okay, the asset is looking bullish, right? It's in a bullish outlook. I repeated it again and again. The only way to have a reversal, basically to see the sellers to take the control, is if and only if we see the asset returning back below the 2500s. Okay, this is the only this is the only thing that could suggest a reversal of this long-term rally. So that's not really the case for the time being. Now, any questions, guys, for gold? Oh, and I kept having the dollar yen at the. That was gold. Really sorry for that. That was gold. Let me move on. Any questions for the gold? Gold. Thanks you for the time. You are welcome. It's my pleasure. It's my job anyway, guys. Okay, we have a question about Nasdaq. But before they were guys, regarding gold, anything else? Anything else regarding gold? I think I clarified the possible directions. If we see 25 point rate cuts, if we have a 50 points rate cut, and what if we see hawkish tone, basically clarifying that we have further cuts, then possibly dollar will get weaker. So that means gold could go up, stocks could go up, dollar oil could get supported as well. What else? Yeah, this is if we have a hawkish statement. Okay, if out of surprise he wakes up and decides that we're gonna have a cautious cat like ECB, and is still on the table for the next meeting to have an unchanged rate and etc etc, if something like that happens, then we might see dollar actually gaining back some ground. But this is a very unlikely scenario, but who knows, right? Oh, gold, stocks. Okay, gold. Let's go to stocks. S&P 500s, Dow Jones. Let's start with the Dow Jones. Basically, flirting with the record highs once again. Very important level. Thank you. Someone who was it? Was David actually that wanted the Dow and the Nasdaq. Yes, thank you for that, David. This is because it's very important. It's at record highs, and not only that, it's flirting this record high for 3 days in a row. But it retesting it since July. It retested it three times. It retested it another 2 times. So you understand that it's a very strong ceiling, a confirmed closure, not retesting, not having a tail. If the daily candle, guys, close above it, and a decisive one preferably, that could open the doors further to the upside. So that could basically open the doors to uh 20, 42 70, 42 300s, 42 700s, and so on and so forth. I mean, it's a huge deal. It's a new record high with Bollingers pointing higher. The asset is well supported, so that could open the doors to, in the bigger picture, that could open the doors for Dow Jones even to 44,000 level. That has never been seen. Okay, if I zoom out a bit, that's the immediate resistances, by the way. But I would like also to use Fibonacci extension, okay, in these latest swings, these immediate swings. So, yeah, okay, that's in line. That's in line. If I use this one, just to cross check these levels, okay. Uh, indeed, indeed. A decisive confirmed closure of the daily candle above this area could open the doors to 43,000 territory in the medium term. Now, intraday now, it's consolidating a lot, my dear David, but uh, but it's quite supported by the 50 hours moving average, which provides a bit of a support to the Dow Jones. So, however, momentum is a bit weak over here, 49. Yeah, but that's a profit taking ahead of the FOMC. So, as long as the asset holds above let me be precise, holds above the week's bottom, which is the 41,500 territory, the overall there is no reversal is expected. So right now we have a bit of a consolidation. Some profit taking conditions have been seen yesterday, but this is just ahead of the decision. So as long as the asset holds above the 41,500 territory, the outlook remains, the overall outlook remains positive. So any swing lower, it will be just a correction before another attempt to the upside. Okay, dear? Nasdaq should be really, really similar. Remember, rate cuts or the prospect of further rate cuts is something that supports the equity market, the stock market. Okay? So now let's check Nasdaq over here. Also consolidating for 4 days in a row. Momentum is changing though. We have a bit of a weakness. Basically, it's like an expanding triangle. This is how it looks like. Very bizarre. Expanded one. No, this is actually, yeah, it is in a triangle. It's at the top of the triangle. So that's quite tricky one from a technical perspective. It is consolidating at the top of the triangle. Momentum is weak. Looking that there is we might see a retracement. But as long as it doesn't cross below the 20-day moving average, then for now it's just flat. So immediate resistance is at the top of the triangle. So basically 19,610, or to be more precise, something that could open the doors further to the upside is a move above 19,700. Okay, 700. A break of that level could open the doors to 20K, 2,500s, and so on and so forth. Okay, here it could open the doors to these resistance levels, 20,000, 2,500s, or even 21K, 21,000. If we see a move above the 19,700 territory. Now, the immediate support is at 19,290. Let me zoom into the 4-hour chart so you can see it as well. That's the floor that we have seen this week. So a break of that level could pressure could pressure the stock lower, but not significantly lower. So the next immediate support could be seen at 19,165 and 19,000. Yeah, round number. That's the immediate support levels if we see a move below the week's support level. Okay. Pound, cable. No one asked for oil, bizarrely. By the way, the profit taking has started here in euro dollar, for example. The last 2 hours, actually 1 hour and 15 minutes, we have seen reversal, a bit of a reversal. So there is a bit of a profit taking over here ahead of the open and the FOMC. Pound, cable. Yeah, cable. Here it is. Cable 1 hour chart. is reverting from the ceiling that we have seen, um, this week, at 132.27, basically 132.30, 28, 29, somewhere there. So it's reverting. So the last an hour and a half, the last 2 hours, we have a pullback. So this smells like profit taking, guys. Profit taking conditions. So the next support level will be the 9 period moving average, basically at 131.97, 131.97, which is also the 61.8 Fibonacci level. It's my 9 period moving average, and it's also the support that we have seen on Monday. If that level breaks, then 131.78 is the basically, you can use Fibonacci levels, you can use the latest swings, but yeah, profit taking conditions before the open. It is what it is. um, I guess, my dear friend David, are you in Asia? Are you trading in the Asia session? If you are trading in Asia session, we have a big team over there, really alert in social media, trying to trying to uh, they're doing a lot of live streamings. They are doing videos, a lot of live sessions in all the social media, actually. So if you are in Asia session, you might consider following the Facebook page, the YouTube page, the Telegram channel um, of your region, in order to also follow the over. I mean, during Asia market, I will probably be sleeping. It's really late over here. So if you're trading the Asia market, guys, uh, try to follow also the social media that we have for those countries as well, in order to keep yourself up to date with our local analysts and analysts and instructors. Okay, David, where are you placed? Where are you living? Where do you live? So until David replies, oh, South Africa, but you like trading. Oh my God, you're waking too early. Jesus Christ. Okay, that's good for you. If you like Asia session, well done. At least you know what you found, the region that you are good at. You found the session that you like trading, and possibly you're getting. It's good, guys. Something that I never talk in the past. In the past, it's good to find either the asset or the session which you like, and you find that you are most successful into, and be an expert. I mean, for example, David is saying that you like trading yen and Nikkei during Asia session. So, okay, perfect. Stay with these assets and this session, and try to become an expert for the yen, an expert for the Nikkei, expert for Asia session. So try to find your expertise and develop yourself to be an expert to that, to be to try to learn everything around for that region, and how the Asia session um, should be traded. So with this way, you're focused on something and you're becoming an expert. Get what I mean? Well done. No, I would probably be speaking, big sleeping. Sorry, is way too late. But yes, since you're trading the Asia session, yeah, you might consider following our social media that they are in Asia. I think you can follow them. There is no restriction. So yeah, keep an eye on that YouTube channel, uh, YouTube, Malaysia YouTube, Telegram. Yeah, I don't think there is a restriction. Try and find out, okay? If not, contact us and we'll let you know. Nigeria, welcome, Emmanuel. How can I get the social media for Uganda? Social media for Uganda is us. Is us, the main pages, but also uh, we have other social media from that our colleagues are supporting, and they keep it up to date. South Africa, in Kenya, in Nigeria. Okay, so if you want to come in touch with the local officers, please let your agent know. Okay, and he will send you all the links all the social media close to your area, in order to stay alert. Okay. uh, it's usually is HFM South Africa, HFM Nigeria, HFM Uganda, HFM, and so on and so forth. Okay. So regarding pound, yes, there is some profit taking conditions, but no pullback down to a 131.50 can't be seen if we don't see a confirmed breakout of 132 level. So as long as 132 doesn't break, then the outlook remains positive. Okay, only a break of 132 level could bring cable down to 131.78 or even 131.50. So to the upside, we had a very decisive, strong 4-hour candles. The latest that we have, really strong one. Momentum is positive, well above zero. MACD, RSI the same, stochastic the same. So basically, bulls are in controls for cable, guys. So a break of this latest swing high of 132.30 could open the doors to 133 level. Okay, 133 level. So basically, bulls are in control. A profit taking, and any pullback, it looks to be limited before another attempt to the upside. So please have this in mind. US oil, last but not least, in a down channel. But guys, I want you to be very careful. Indeed, we had a swing higher the last 6 days. So recovered from 60, let me be precise, recovered from 65.50 level, recovered and is currently at the 50-day moving average, retesting basically the 71 level currently. But momentum is increasing downwards. Look at that. Look at my MACD. I connected the latest swing and it points down. So this, what I'm trying to say is that this swing higher, this rebound is limited. So a pullback is expected, a reversal is expected. Okay? So keep that in mind. This is a key resistance level, the one that I put in yellow. It's a support level that it held for actually from February let me be precise, from February up to mid-August. It's a strong support level that then now it has converted into resistance, but it's unlikely to break, especially since we see that the momentum is increasing downwards. So this looks, this bounce, this move higher, it looks that it's running out of steam. Okay, so a break of 69.50 level, which is the last 2 days bottom, could open the doors down to the mid of the channel and lower to the 65 level. Okay, clear? I will go in. Okay, Tiger is saying, will it see breaking the 70.60 or it will? Okay, my dear friend, look at that. Okay, we had a rebound. This is the 1 hour chart. Okay, we had indeed a rebound from 69.50, and it's currently at 50.60 level, 50.64, as you said. But momentum is at 0. RSI is at 50. Let me also put my 5 and 9 exponential moving averages that I have. Let me actually change my template for a 5 and 9 one. Template. Yeah, here it is. This is the 5 and 9 exponential moving average. Look at that. They haven't bullishly crossed yet. Okay, we had a reversal. The asset, however, is still below the pivot point. Is still the momentum is weak. There is no indication from the fast moving average over here regarding a higher move. So regardless of what will happen, this looks to be a limited move. Okay. Okay, there are strong candles indeed. Strong candles. Let me put Heiken Ashi over here. Are you interested in a very short term 30 minutes chart? Let me put the Heiken Ashi. So, okay, indeed, we had, let me put the 30 minutes chart. We have consecutive bullish candles. So it seems that, yes, there is further room to the upside, but limited one. So 71, it looks to be the ceiling. Okay. And 70, 76. Yeah. And if I put my, yeah. So, yeah, we have a rebound indeed, but it looks limited. The overall outlook is negative. Let me put the 5 exponential and the 9 exponential using Heiken Ashi. Come on. Can you see it? Okay. Heiken Ashi in the 30 minutes chart, they have crossed. Heiken Ashi, moving average, they have bullishly crossed. Oh, sorry. Yeah, they have bullishly crossed. The asset for 1, 2, 3, 4, 5 sessions in a row is moving higher with no tail at the bottom. So there is some room to the upside, but in the very, very short time frame. So 70, 76, and 71 are the next level, resistance level for a possibly bullish oil in the very, very, very short time frame. Okay, very short time frame. As soon as you see the Heiken Ashi be dodgy or having tails, start questioning whether this is the ceiling. So if you start seeing tail at the bottom of the Heiken Ashi, that's the very first indication that the rally is over. Okay, be very careful. Stop losses, put your stop loss, put some target levels, okay? Be very careful. For now, it seems that there is still some room to the upside, but limited one, okay? Limited. This is the 30-minute chart. I repeat, 30-minute chart. Overall, is expected to continue this downwards channel. Guys, I think I've analyzed everything. Not everything. Pound yen. Okay. For pound yen, guys, there was indeed a reversal, a rebound, but my dear friend is still at 38.2 Fibonacci level. So MACD is changing. Very mixed indicators over here. The outlook is a bit mixed, so I'm gonna zoom in. So I mean, the overall outlook right now, the overall outlook is negative anyway. Okay, it's negative. Negative momentum, pullback. Um, so the overall outlook is negative. But if we move down to the 1 hour chart, we can see that it's retesting the yesterday's highs, so supported by the moving averages. So there is some room to the upside, Emirate. So your very next resistance level will be on the 50% Fibonacci level, so 188.38 level, 0.40, okay, 0.40. 188.40 is the next resistance. If we see the the candles closing above this triple fractal, supported by moving average, expanded Bollingers, MACD intraday rising, stochastic the same, RSI is holding close to 63. So for pound yen, intraday there is support with the next level, resistance level at 188.38. Overall, is pretty flat, okay, pretty flat. So yeah, a move below 83 level, 83.70, could open the doors further lower to December's bottom. Okay, have I missed anything? I think I covered everything. Yeah, I covered everything, guys. Any further questions before I call it a date? The live will stay there, so you can scroll down and find the asset that you wanted me to analyze. So for anyone that just joined, don't worry, it will stay there, so you can scroll from the beginning and watch it again, or find what I was analyzing that very moment. I mean, if you want gold, you can take the cursor of the video, find when I was analyzing gold, and listen to that. If you wanted pound, that. If you wanted euro dollar, that. Okay. So yeah. By the way, when I was analyzing gold, mistakenly I had a euro dollar banner going around. So please don't get confused. It's gold. I shared the question in gold, so it's gold. Good for you, Thado. Good for you. Focus solely on gold. Try to understand the fundamentals behind gold, because gold is not only a dollar cross, it's not only affected by interest rates, by safe haven conditions, by risk on mode. It's also affected by literal demand for the gold reserves. So you need also imports, exports, consumers. Find the fundamentals, what what drives gold as an asset, as an actual asset that you're holding, that you're buying the gold. Trying to learn as much as you can on gold, and this will help you understand how gold prices are moving. Okay, you will try to find everything that you can on gold and focus on gold. Okay, that's very good. um I did analyze it, Emmanuel. So as we said, everything supports gold. um, uh, we might see some profit taking conditions. This is what we're seeing in the 30 minutes chart, some profit taking conditions, uh, basically a pullback before the big event. But overall, the outlook is not changing for gold. The gold has remained to the upside, ignore that one, well supported by the prospect of further rate cuts, well supported by the easing in recession, by growth, by geopolitics, by detected demand from the big economies, by the purchases of gold reserves from the big economies such as US and China. So overall, the trend is unlikely to change. uh, so the only thing that could add some pressure limited to the gold today is if Mr. Powell announce that they might stay on hold for the next meeting. So if he sounded a bit dovish, or if he sounded a bit cautious, that you know what, we might consider halting rate and change in the next meeting and things like that, that could add some pressure on gold. But if we see the rate cut today, if we see a hawkish tone as well, that could support significant the dollar. Okay, the gold. Sorry, the gold. But in the flip side, so in the to the upside, keep an eye. Okay, to the upside, keep an eye on the 2583, and on the flip side, keep an eye on 2561 level. Okay, I I also, if you are a very short-term trader, in the 1 hour chart, you will find, by connecting the lows, the latest lows, you can see, you can find a nice support level over here by connecting the bottom, the lows of the last 2 days. Okay, this is a nice support level. If a break of this level could retest the 2561 level. Okay, while move higher and a break of the first resistance of the day could open the door to 2600 and 2630. Okay, but I have analyzed it already in depth earlier. So once I close the session, drag your cursor and you will find the analysis. Okay, guys, I'm already live for 1 hour and 40 minutes. I'm running around of steam. Thank you very much for attending. Thank you very much for your nice words. Hopefully these sessions help you. I haven't ignored you, Gerald, about silver. Same thing about very similar approach with gold. I have Heiken Ash over here in silver. It's we have a nice channel, okay, over here, very nice channel in the 1 hour chart. So this will help you, because you will be able to see a break of the channel upwards could open the doors to previous highs such as 3150, 32 level. Okay, so use this channel for stay alert in a potential break above the 3080 level, 3080, or a break in general of the outside the channel, above the channel, that could open the doors to 3150, 32 level for silver. Okay, Overall, well supported. It has been in a rally the whole September. Okay, sorry for not staying for longer, but I'm nearly 2 hours over here. Thank you guys very, very much. Hopefully you find the session helpful. For anyone joining right now, the live will stay there. Drag and drop your cursor and you will find my analysis. Thank you very much. Have a great day ahead. Take care. If you're gonna trade the news, please, an appropriate risk and reward ratio. Set your stop loss beforehand. Set your target. Small positions if you are trading the news to manage your risk. Okay? If you don't know how to trade the news, stay outside the market. Wait the dust to settle, as we say, the market noise to settle, in order to have a clear view of the direction. Okay, thank you very much. Have a great day ahead. Take care, and we're gonna see you again later on. Thank you very much. Have a great day ahead. Bye bye.